Stocks have not posted gains for a single day this week, but Wall Street is not ready to cut this entire week of loss. Joining me now is Scott Wren. He is a Senior Global Equity Strategist at Wells Fargo Investment Institute. Hi, Scott.
Hello.
So you think the market volatility presents a buying opportunity? Timing the markets is never a good idea, but when is your plan to pull the trigger and where are you looking to buy?
Well, what we've been trying to tell our clients, and we've been telling them this for a while, is that you should look at volatility as your friend, not your enemy. I mean, we want them taking advantage of pullback days, pullback weeks, and that's largely because if you look at retail investors as a whole, and I think our clients are probably a pretty good example of that, they're sitting on too much cash. They've been underinvested in the stock market, and if we're right and this cyclical bull market still has several more years to run and we get, let's say, 6 to 10% total returns over the next couple of years, that's worthy of investment. You compound that over a 3-year period. We want our clients in this market. So we definitely want them in there taking advantage of these pullbacks like we're having now.
Quickly to the economy, the U.S. economic growth cooled last quarter, unchanged from the government's previous estimate, but consumer spending was one of the data points that were increased. Are American consumers really feeling that good, or does the holiday shopping season play into that figure?
Well, I think the holiday shopping season probably does, but if you look at these confidence indicators, they're at good levels. I mean, they're still below levels you would normally see in a good economy, but they're definitely in good territory, or at least in reasonable territory. So I think consumers are feeling good. They're seeing their 401k balances up. They're seeing gasoline prices down. They're seeing stock prices up. The labor market's improving. So I think you have some things going on that are going to continue to improve, that are going to continue to help support consumer spending. Now, of course, wages are definitely a concern. I think the Federal Reserve is very closely watching what's going on with wages. But needless to say, there's more jobs out there. They may not be the best quality jobs, but right now a job's a job. We want to see more of that. And I think you're going to see consumers out there spending more money as we go through the year.
But when it comes to companies, companies are saying they're getting hurt by the stronger dollar. We'll find out more when earnings start to roll in. So I know you say that you want your clients to get in on this market because they're sitting on too much cash, but does it make sense to just sit on the sidelines just for a little bit until the earnings parade gets underway?
Well, what we try to do, of course, is we're trying to anticipate what's going to happen with earnings. And in my opinion, the consensus is too low, not only here for the first quarter, but definitely for the year. So we want to try to anticipate what's going to happen with the economy, anticipate what's going to happen with earnings. And if we like what we see, then we want to take advantage of that. So we would not recommend that our clients sit on the sidelines here. We want them legging into the market. And if you get some earnings-related volatility, which I certainly think we're going to see, we want them legging in on the way down. So that, we have the 200-day moving average down here near 2010 in the S&P 500. It wouldn't surprise me if we challenge that at all. But I think we're going to hold in there, or at least a little bit near there. So, we're definitely going to be trying to get our clients to leg in here. I don't think they should sit on the sidelines. First quarter earnings are not going to be very good, but when you look out for the full year, which we're trying to get them to do, I think earnings are going to be okay. They're not going to be great, but they're going to be better than consensus.
Great. Thanks, Scott, for sharing your insight with us. Scott Wren is the Senior Global Equity Strategist at Wells Fargo Investment Institute, and for The Street, I'm Susanna Lee.